Hi, I'm Adrian Strittmatter. Welcome to Bricks and More. I'm the CEO and co-founder of Synergies, a global creative consultancy specializing in destinations, real estate, and the hospitality sector. Bricks and More is all about exploring how to generate, unlock, and maximize real estate value. Our mission is to challenge outdated and limiting notions of how this is done. In each episode, we talk to top professionals to uncover innovative strategies that drive short, medium, and long-term gains. So if you're passionate about making real estate more valuable for more people, you're in the right place. Welcome to Bricks and More. Offices are under more pressure than ever. Changing work patterns, rising costs, higher expectations. So the question is no longer if offices need to evolve, but how their value is to be created, sustained, and unlocked. In this episode of Bricks and More, we explore how institutional investors unlock value in one of the most complex asset classes in Europe. This is a conversation about strategy at scale, where future value lies, how ESG becomes a performance driver, and how offices remain relevant, resilient, and investable in a rapidly changing market. To explore this, I'm delighted to welcome Emilie Jaskula, Global Head of Offices at BNP Paribas Asset Management. Emilie oversees a 25 billion European office portfolio, leading investment strategy, asset management, and ESG transformation across multiple markets. With over 20 years of experience, she brings a truly holistic view of office value from individual assets to entire portfolios. At BNP Paribas Asset Management, her role sits at the intersection of performance, purpose, and long-term resilience. This is an absolute masterclass in how institutional thinking, ESG and Occupier insight come together to unlock value at scale. Emilie, welcome to Bricks and More.
Thank you. Thank you for having me.
This is a very special edition because we're in our Paris special edition. In the market across Europe has been crazy, dynamic, changing. How, in your roles at AXA IM and BNP Paribas AM, have you seen the market? How have you lived it? How's it been for you?
As you say, it has been exciting, challenging.
Good use of words.
And I think we should not speak in the past. It's still going on, and the next few years will be as well changing, moving environment. So we need to be ready for more in this changing environment. I think it's in a way that was exciting. So again, difficult times, some difficult assets to manage, and a lot of our reference have been moving. But in a way, that's also what makes our job fascinating, is that we have to reinvent every day, and we are well served in the current market.
And what would you say were the biggest sort of change, as you said, of references or metrics that you've seen specifically in the Paris market, potentially?
We've seen more on the financial aspects, the changes. So those are related to this rate cycle. And I think, in a way, we are going to more normalization around this, even though there has been a lot of losses, and still this polarization effect is making that some of the assets are still suffering, and probably for a couple of years in the future. But I would say it's rather in terms of expectation of centrality, ESG profile. There has been more demand, even beyond these remote working changes. There has been a lot more expectation on this ESG side. So this is a new metric that has included in the asset management KPIs environment.
And sort of more personally, you've obviously got a very pivotal role within European real estate today, or global real estate. How did you get there? What's been your sort of your journey to this point?
Yeah, actually, it has been a short journey because I've done this in two companies. So I've been very faithful to the company. I actually started almost 20 years ago in acquisition. It was during the GFC, so also a challenging period.
Challenging moment,
and after a couple of years, that's where I had more financial skills and really the deep dive into the real estate environment. And after a couple of years, I was in a way, missing something. So I decided to move to the asset management remit of, at the time, AEW Europe. And that's where I really thought what was best for me. Like you deep dive in the assets, you start to be really operationally in charge of changing the direction of travel of an asset in a crisis period as well. And then I joined AXA Investment Manager, and it was for specifically a fund that was liquidating all the assets again as a consequence of the GFC.
Okay.
They had to, because of the redemption, they had to close the fund within a period of 3 years. So it was very exciting to create the value and find the liquidity in a short time frame.
In a short time frame,
it's really an accelerated asset management activity. And then I've been through different roles at AXA in disposals, managing the team. And until 2 years ago, I was in charge of the asset management team in France. So all a very, very nice portfolio with a lot of assets.
Quite large. Yeah.
Yes, it's quite a large portfolio and very high quality and very diversified. So that was a really exciting piece of this. You've got hotels, you've got shopping centers, high street retail, logistic, residential, and obviously offices.
And offices, yeah.
And since for the past 2 years now, I've been in charge of the office sector because now we have more this sector focus in general worldwide, and so I'm overseeing the office activity.
And in terms of you talk a lot about those, the GFC and other sort of macro shifts that have happened over the years. How have you seen asset management changing? What are the demands? How has that role of asset management been forged or changed by these crises or macro political shifts?
I think the biggest change occurred already before I started to work. It was this financial approach to real estate, and so the asset manager had to become much more financial in the way to address the value creation. So it's really the US influence that came at the end of the 90s to be more accountable financial-driven strategies. The most recent change is, as you mentioned at the beginning, this ESG change. Now you ask also the asset manager to be an ESG expert. And in between, there has been a lot of other changes, like being a commercial expert, a marketing agent, an architect specialist to really adapt the usage. But that's a long story.
And in terms of we mentioned value creation of offices, if we look at offices as an asset class, how would you define a value for offices?
I think not the value for offices is how you create really the attraction for the client. So you mentioned that what is the biggest change? It's it's a formula that we hear a lot, but that I think it's very true. It's this B2B approach that becomes now a B2C. So that really you are changing your client in fine. And I like to make the comparison with the shopping center universe. So again, we have the chance at AXA IM now BNP Asset Management to manage a large portfolio of shopping centers. And we talk a lot about the comparison between hospitality and definitely that's true. There is an hospitality piece that needs to be embarked in the journey for creating value for offices. It's definitely true. But I like to see it also with this shopping center experience because again, shopping center, your demand is never guaranteed. You have to earn your customer every day. And I think what has changed the most in the office environment and demand today is this kind of philosophy. I want people to come to the office, not because the boss say you need to be in the office 5 days a week and you have no choice, but because you want to be in the office and really consume this commodity.
This commodity, yeah. I think that's a really important point. I mean, I know that we've discussed this in other remits where the comparison of sort of the shopping online versus the sort of bricks and mortar retail and how that's also transpired in offices today. I mean, why would you say potentially that it's taken so long for offices to potentially view their tenants as customers or clients in more of a, as you said, from B2B to B2C? Why do you think it's taken slightly longer and maybe it's taken a crisis for people to transform it or multiple crises?
To be honest, I think it started before. Maybe according to the country and the maturity around those questions, there has been a difference. But as we are this Paris special, I would say that France and especially in Paris, the office offer was already in this philosophy even long before the COVID changes and all this remote working wave. The most spectacular change is that it has now touched all segments of the office in all countries. And now you need to find a way to apply all this philosophy, the other locations where maybe you have less margin in terms of financial KPIs, less space. And so you need to be more creative in the way to apply this philosophy more widely.
More widely. I mean, obviously, your job as an asset manager and owner, you can only do so much to create those spaces. But then it's also obviously to the companies with regards to their return to work policies.
Totally right.
We've seen huge shifts, especially with some of the big US corporates. I know that it's made the news over the last couple of months of changing those and those of having an effect on office demand to a certain degree. Have you seen that across the portfolio in Europe as well?
Yes, obviously. We see that everywhere. In all European capitals, we see this progressive comeback to the office. We have to be careful with the tree which is hiding the forest. It's a very French expression.
It's a very good one, actually.
It's meaning. So there is really the newspaper headlines, and that's true that a lot of large corporates are pushing employees back to the office and forcing them. I would say that the average will remain below what we saw before the general remote working
remote working,
but it's true that there is a trend to come back to the office, but not only because of these obligations, but also because we've tested the limits of this remote working model. Even the employees have tested the limit themselves, and maybe it can switch to a couple of people who like this quietness that you can get in this
people or roles
working.
As well, isn't it? It's also role dependent on what you're doing.
Absolutely, and also from your family environment and all your personal life is influencing also the vision of this. But in general, we are human. We are social, and this is coming back as a priority. Encounter your colleagues and to work together. And
out of interest, so maybe sort of looking at that very quickly and going slightly off piste, do you take a lot of not advice, or do you listen to a lot of what these HR managers or are saying to you as kind of what are their metrics, what are they seeing, what are the pressures, what are the desires, and does that help you sort of create those new offices or to see where those you're going to be able to help them to encourage or to create viable spaces?
That's a good point that you are highlighting, because it's always the limit of the landlord towards the remit of the occupier. And so as a landlord, we can provide great places, amenities, food offer, fitness, whatever, a lot of different kind of amenities. But it will never be sufficient. So it will always be on the occupier side that they need to create the culture of the company. And after that, once they have this real intention to foster gathering and communication among their employees, then we can partner together and help them to have the good condition in their premises to organize this return to work. It can be with conference center areas and more casual areas also, if they want to play on this part of the remit. So it's after that we can create a partnership, but it has to come from the corporate side and this real intention to create something, an envy for the employees to come back.
And in terms of sort of individual assets, I can see how that could be, you've got the individual asset, you've got the market, and you can kind of have an asset or city by city strategy. How do you then look at it sort of on a macro scale? Because obviously, every asset is different, every market is different, and then you look city markets, country markets. I don't know if do you create models? How do you work on a macro scale when you have to, as you said, sort of look at a sort of pan-European or global portfolio?
That's a good point, because again, our strong conviction, the way we see asset management at BNP IM, it's really that it's the local presence that creates the quality of the asset management, that you need to be underground, working with the brokers, with the tenants, and really be close to the stakeholders to deliver the best strategy and the best performance. So it has to remain really a local expertise, and that's why we are having expert teams specialized by sector to be really the best in their local market. but still, it would be a pity not to capitalize also on this global vision that we have, because we really have some advance compared to some of our peers thanks to this global vision. So we have two ways of seeing that. First, there is the data piece. There is really strength to drive out of the data that we can have benchmark and create this overall vision that gives some anticipation of trends to the local teams, so that they can always be ahead of their market.
To not be reactive to things that might come.
Not be followers of a trend, but maybe bringing the trend. And that's always the balance that you need to find between what you believe is a good approach, philosophy, and conviction that we strongly have about new ways of working and the necessity for offices to be offering even more to their clients, and the local demand, because you should not shift too much. The models might not be ready. The tenant might not be ready to pay the price for those services that you are adding to the building. So it's a balance always between this global vision and understanding of trends that the general overview gives us, and the local expertise. That's one angle. And the other one is a need to showcase what works well in the portfolio, and to try to make some not standardized, but a general approach of it.
Or standards at the very least.
Standards or reference, I would say.
Yeah, references.
It's more references. A framework in which an asset manager in every country can, and for every kind of assets, can really pick what makes sense. And so we've made this exercise to create what we call the new ways of working scorecard. So that's, maybe we need to find a marketing name for this one.
Well, we can always help.
And there are like 6 axes on this, and like 60 questions. And so for every asset, according to the size of it and to its location, more suburban or more central, you will have some questions and appreciate what's the positioning of an asset currently and what is potential compared to accessibility topics, hospitality, health and comfort, ESG performance, digitalization, and flexibility. So that's the 6 axes. And so you can rate your building towards those axes according to, again, size and local positioning, and appreciate what maybe you could push further to create more attraction at asset level.
No, that's really good.
That's a way to give a framework, but to really leave hand and expertise to the local teams.
What's super interesting in what you say is that we carried out a mandate a couple of years ago for Accor, where they had across their brands, their different brands and operator brands in different markets had the same thing, and they had something called the 7 pillars of experience, which is quite clear to see where, you could give an authentic flavor to the work you were doing, but also seeing where that gap for additional value was. So I find that really interesting that actually those, as you said, benchmarks or values or references are also used. Because my next question was, well, where do you see, if you were to look at it sort of at a top level, what are the main, because people could argue, is there still value in offices? And if so, across those potential six metrics, where do you see the most value that still is there to be created? What are the main levers or drivers?
Definitely, it will depend on the asset and their location. But I would say that in general, one of the key challenges that offices will need to address further is the flexibility topic. I think we are in a world of uncertainty in general, political uncertainty that makes the corporates more hesitant towards their real estate strategy, social uncertainty, whether they will come to office or not, AI changes that are about to occur. So a lot of uncertainty, so we need to accompany this uncertainty as a landlord in terms of duration of leases, in terms of size of the premises, and even more extremely in terms of change of use of a building that may become one day residential because of the evolution of the society and the demand. So this is for me the key piece that still need to be addressed in the office universe. There has been a lot of progress with this rise of serviced offices business, but it's still, I think, a long journey to make it more fluent.
And a tough one, because at the end of the day, you are dealing with bricks and mortar, you are dealing with stone, you are dealing with things that take a long time to develop. So it's true that flexibility has a lot of, as you said, a lot of different lives in a lot of different ways. Do you see the productization, that flexibility, as you said, of different types of offices, different lease terms? How do you see that going between the different markets? Are all the markets ready for that flexibility, as you mentioned?
I think all the tenants would like flexibility. Yeah. That's the ideal world. You want to have a capacity to stay in the premises if you want. You want to reduce whenever you want. You really want.
In an ideal world,
yes, from one day to the other. So this is the ideal environment, ideal demand of tenants. But they have also requirements. They have a cost requirement. So we need to limit also the cost of this flexibility. And I think today this is still one of the pain points because flexibility comes also with hospitality and staff to manage this flexibility. And well, that's additional cost to the real estate basis. So are all corporates eager and able to pay for those costs? Probably not. Then there is the method of valuation of investors, long-term investors. We still have this cap rate method, which is capitalizing long-term income.
Long-term income,
it doesn't make sense anymore when you are talking about flexibility and variation in the NOI. So is it still a metrics that makes sense? Probably we can keep this as a way to appreciate value, but it has to be mitigated with other income-driven methodologies, and this is still not embodied in the financial vision of real estate.
And do you think it's really interesting because I think through the portfolio you've obviously got other asset classes where that flexibility, if we were to look at hotels, for example, or even retail, where that calculation of value is based on more flexible terms, more fluid terms. Are there things that when people are looking at office valuations, are they looking at other asset classes to say, well, this is how they do it in hospitality or how they do it? Yeah.
Absolutely. You definitely, for example, the hotel management agreement, which is more and more usual in the hotel industry, is a model for a lot of office flexibility models. But according to the country there and according to the stakeholders and the investors, there might be some limitation, to this commercial activity, which is different from the civil activity of traditional real estate. So you need some structuration of the fiscal and corporate models to make it work. So there are a lot of situations where it can work, some countries where it can work, but a lot of others where probably from a legal perspective, there needs to be some changes also to push in this direction.
In that direction. And I think that country difference is really interesting, going back to one of the other things that you mentioned with regards to flexibility, or in French, we dit la réversibilité des assets, in terms of changing their usages to fit demand. Are you finding that there are differences within the market and the ability through planning or permis de construire to change the usages, which you might be, well, not frustrated with, but that it's harder to implement change at that level?
On that topic, I would say that I know better the Western European capitals, so we talk for this remit, that all face the same situation. Yeah. So a building permit is for offices, is for residential. So you need to change this building permit. There has been some experiences, notably in France, in Bordeaux, of those double destination building permit. And
successful
so far. There is one usage so far which has been implemented, but there is this capacity in the long term, and there are discussions at the top levels of France, for example, to consider this as more general approach that can be, especially in some difficult office submarkets, it could be used, and so there are some thoughts towards this. But I think there is a real awareness that is coming around those topics, and around the regulation that is also sometimes an obstacle. Exactly. The fire and safety regulation, we have to be careful, but maybe there can be some pragmatism around those changes that can help this future transformation. So on the regulation side, on the administrative vision, I'm quite optimistic on the fact that there will be a real change on those topics, again, on the legal side to facilitate
to enable that
transformation.
Change. Yeah.
After that, there is obviously the financial obstacle to this. So there are a lot of... the journey is still long to convert, but at least if we can facilitate with those administrative aspects, that would be definitely helpful.
Because I think that's personally something that, I've always been drawn to in real estate, is that, a building can be multiple things in multiple ways. And with societal changes, post-industrial societies, you can see, these amazing industrial buildings becoming lofts or anything else. So that ability to reinvent themselves is one of the strengths. When you, obviously, as you mentioned, you've got a very sort of a broad portfolio. When you sort of see an asset and you're working with the local teams, what are the defining factors between going, well, actually, we're going to deploy this CapEx or this redevelopment or redeployment? I mean, what are the kind of things that you're looking at in a scenario in this way? Or do you go like, you know what, guys, we're exiting at this point, we can't?
That's the very difficult question of the current market. So first, when we face this kind of situation, like a tenant is leaving a building, the asset is starting to be like 15, 20 years old, we make this... there is this new way of working appreciation so that we can anticipate what would be...
You've got your grid.
Yes, exactly. So what, in terms of amenities and usage, what do we want to target? Who will be the target for those assets? Is it more central, premium, very high standard? Will the demand be more driven by financial criteria so that we need to pay attention to the level of rent that will come in between? Do we want to target the best ESG standards? That's generally the way we see it, but what is exactly the best ESG standards? What do you want to target in this submarket in terms of performance? So we make this general assessment and obviously the assessment of the current technical quality of the building and its weaknesses and strengths. And based on this, we can drive different scenarios. Might be more design, usage, refurbishment, or more fundamental repurposing in terms of technical layouts and more structural changes that we need to undertake. Not even talking about the change of use, which is still another story.
Another story, yeah.
And the big question today is that because of this flight to quality in the office demand, I put the word, you see, flight to quality. That's
we're following the questions. We're following them.
So flight to quality, you need to apply this grid of rethink to almost all assets, whatever their location. And the problem is that in some locations, there is a real question mark on the capacity of the market to absorb this new offer that you may create. You may create the best office building, might be difficult. So we need to appreciate whether the difficulty of this market is due to temporary oversupply, due to maybe the previous construction cycle. And we anticipate that in some location, due to the reduction of the construction level, at the moment, there will be a scarcity of high-quality assets in those locations, even not the best central ones, but good, well-connected location. So it's more usual real estate cycles of offer and supply. Or is it, and this is more difficult, a more fundamental problem of the location, meaning that because of those changes in the demand drivers of the occupiers, because of generally accessibility issues, and probably on the long term, a slight reduction of global office demand, will this location never be suitable for offices anymore? Again, and oversupplied anyway, so that we need to consider a change of use, and then this is another story that you start.
I really like that, because I think you're right in terms of the flight to quality. People normally would just understand that as core or core plus, but actually it's a more nuanced, because flight to quality within a location could mean something slightly different.
Absolutely.
Do you think there is a possible definition for what is understood to be prime offices? Is that just a generalistic view, which is a bit poor?
I think it's a generalistic view, which is a bit poor. No, prime always means the best asset in the best location, and I would say in the past 5 years, the best ESG standards has become a third criteria. But well, this means the same in every cycle and every period.
Yeah.
Now we talk about super prime.
Yeah.
So
We needed something new. Yeah.
This is something new. This is super location, super quality.
What's next?
And super ESG. So prime is always the same. The question is more related to the demand of the occupier, and maybe they have restricted and narrowed their vision of their expectations in location, so that you cannot be anymore 15 minutes away from the main transport hub. Those kind of criteria may have been narrowed, but it remains the same definition.
You mentioned something really interesting before with regards to different markets and oversupply. So I can understand that my next question might be a little bit tilted in that sense. But do you see markets or cities where you can still sort of hope for, spot or strategize around offices outperforming what they're currently doing, where you really see that there's a gap between what we can deliver with the existing portfolio and that there is a real demand for that? Do you still at that level?
The easy answer to your question is the central CBD. Definitely there will be a scarcity of high quality offer because of just
and CBD in Paris or CBDs?
CBD in capital cities.
In capital cities,
in general.
Yeah.
But I'm not sure that they will outperform expectation, because expectations are already very high, and we see already the competition coming back on those places, because this is the easiest way to anticipate the risk that there will be demand and scarcity and growing rents in those central locations. The more difficult question is, what are the other markets that may outperform? I have personally a strong conviction around La Défense. For example, in the Paris region, I really believe that this location has the quality of supply, the quality of amenities in the building and in the environment, the excellent transportation. I mean, you cannot do better. Yeah. So currently, there is a kind of oversupply because of new construction that have been delivered, but again, of high quality. So I'm very confident that the fundamentals are there. There is a European influence of this neighborhood. So it's too big to fail. And the pricing gap with Central Paris is very wide. So I think it's a matter of recognition of this market, of knowing this. But I'm very confident on the recovery of this market. I think we can apply a similar way of thinking to Canary Wharf. Also because of connection that has been really strongly increased in the past years with the new metro connection. The amenity level is very good. The quality of the offices also is good. There is also life.
Good mixity of asset classes.
Good mixity of assets with those residential presence. And so I think those are the ingredients to make the location work. I also believe in Saint-Ouen in Paris. It's a little more challenging because of this amenity around the city. But again, the city is evolving a lot. The connection is great. So I've got some conviction, but you really have to look sub-market by sub-market if those fundamentals are here. And for those, for examples, I believe they are.
And at the moment, you would still say that they're kind of a bit dogged, or there's a problem of perception around those markets, which is maybe more of a historical perception?
I would say there is definitely a problem of perception of different according to the different markets that I mentioned. There is also a matter of oversupply in a market that has been challenged and shifting with the COVID years and the demand, and now some political uncertainty. So I think there is an accumulation of counter wins against those markets. But real estate is about long term. And when you look long term, they have the fundamentals, and especially infrastructure, which is the hardest to get to make it work.
Speaking of long term and future proofing, I know it's something that we've discussed a lot around, and it's something that's very important at sort of a global level with regards to ESG and how the built environment gets better and better at developing, redeveloping, and adapting to the new constraints or new requirements with regards to ESG. I mean, what is the current perception at BNP Paribas AM around ESG and around the work that you guys have been doing over the last, many, many years, decades, one would argue, around that. What is the current perception? Because it's not necessarily been globally promoted and supported, or there have been some, as you said, some counterwinds. But what is the current view on your side?
It's globally supported. That's a strong DNA conviction that performance in ESG, and especially the carbon footprint, needs to be improved. This is a trend, even though currently, for the past 2 years, there has been less noise around this because also the financial difficulties make it a little less prominent. But fundamentally, it's a necessity of the world, of the planet. Yeah. So it's there for long, and that's really a strong conviction. I would say that there has been a very strong focus on those topics, especially just after COVID. Also because the industry was not structured, the way of measuring, the KPIs to follow was not clear, the way of measuring were not there. So everything was to build in terms of expertise, trajectory, ambition. What do you plan? What's the target? Once you have the way which is clear, it's much easier to speak less about this and just doing
it. Just do it.
Do it. And I heard someone saying that, and I think it's very clear. I believe nobody talks much. Well, nobody. People talk less about ESG stakes in the real estate, but they are not doing less. It's more hidden because it's not what is looked after the most. But as it's, again, real estate, we are on a long-term action plan.
Exactly.
So we are doing this because when it will come back as a priority, because it will come back, we will be ready and already delivering the performance. So that's the strong conviction. One of the things that is more challenging on this journey is that there is a lot of expectation from at European level, at national level, against the carbon footprint, the carbon footprint of the construction, the building permit, etc. So there is a lot of expectation on the landlord side. On the tenant side, it's less obvious. So the real question is, how do you get the value of all those investments from the tenancy part? And how do you really create the appetite for those best ESG performer assets? And in a way, it's ironic to say that, but all the crisis after the Ukrainian war on the price of commodities of energy has also raised awareness on a very pragmatical angle for those topics. So we really see how costly it can become, the energy-consuming building. And so we need to work hand in hand. And in this case, the tenants are really demanding to reduce and to optimize those costs.
Those costs. I think there's also what we've always found is that I think the message, as you said, sort of the message very clear when it comes down to what the features are, what the ESG features are, what's the strategy, but how do you translate that into user benefits? So really moving from features to benefits has always been a harder thing to explain or to do. You mentioned obviously the element of the let's say the energy bills, but obviously ESG also has the S and the G element around governance and the social elements, which are potentially easier, aren't they, in terms of sort of selling to tenants those features there?
Yes, this social part is really embodied in the amenity question. You can push these social aspects beyond health and comfort of your user to your external stakeholders. So on these social matters, how do you incorporate a project in its environment? And there are some very efficient ways of doing this, like opening the ground floors to the public, not making those closed buildings, but really open to the public according to the country and the culture, and also, of course, the security. It's more or less possible, but that's a good way to create connections among the city and to really incorporate socially the office environment in a city. You can also obviously offer some retail, which is for the city and maybe some discounted price. And there are some interesting ideas and innovation and advice around this. So this is definitely something that I personally believe a lot. Which is not a constraint, which is just creating positive additions. On the government side, it's I would say the real estate is already very regulated. KYC is totally day-to-day of the way we manage assets. So I would say it's really part of the DNA for a long time now.
Long time.
But the E piece remains the most recent one, even though we talk about this for the past 20 years. It has been definitely accelerating in the past 6-7 years. And this piece, you need data. So you need to, it's hard cost behind this.
Yeah, exactly.
So of course, there is the tenant engagement piece, which is a strong component of it. But to get the tenant engagement, you need the data to have a common journey with your tenant. So it's a chicken and egg in a way.
And going back to the tenant, I think this is really interesting. We talk a lot about, understanding your customer, understanding, the different flows that will come in and out of the building around this sort of user-centric repositioning. I know that is something, and you mentioned it as well, going from B to B to B to B to C. What does that actually mean in practice for you, this user-centric positioning?
There is the piece ahead of the conception. So how do you capitalize on the data of the portfolio that we have locally and more widely, on the relations with the tenants that you have, because again, we have a large portfolio, so we have the chance to encounter a lot of tenants. So how do you create this relation so that you can anticipate their needs? And I think that's the most specific piece. You cannot conceive a building and in France, for example, sign a 9-year firm lease and a rendezvous in 9 years. It doesn't work anymore. It used to be the working because, again, offices were more commodity, but without the active asset management of it. Now you need to be there in a close relationship with your tenant on the ESG stakes, because it's a day-to-day work together, and on the expectations, because their businesses are changing, their needs are changing. So how do you accompany this as a landlord? You cannot just wait 9 years before asking the question. You're right. In terms of asset, sort of active asset management, the way that we've always looked at it, and we've kind of coined it as sort of landlord metamorphosis from someone, who's just a landlord, picks up the rent, to active asset management, and now moving into what we would call kind of owner-operator territory, which is arguably sometimes a more complicated and day-to-day function. When we say sort of you listen to occupiers and you've got that data, how do you just, quite practical, how do you collect that data? How are you sort of in tune and listening to what your tenants are saying as a global landlord? You have first we work a lot with a key stakeholder of our universe, which is the property manager. So they are the one the closest to the tenants. So we need to make sure that they have the time to be close to the tenants, and that we are also taking the time to listen to the tenants directly through tenant survey, or to the property manager who is in direct day-to-day discussion with the tenant. So again, according to the scale of the building, you have operators to operate the amenities. So it's important to create the right framework with them in terms of KPIs and also meetings to make sure that, again, you just don't give the keys and rendezvous later. You work together to measure the success of the offer. This restaurant is not catching any customer anymore. Why? Is it a problem of price positioning? Is it a problem of quality of offer? Is it a problem of size of the premises? So that you need to work with the operator and to make sure that you have the best-in-class operator to operate, and that they are able to measure, again, because they are the closest to the consumer, the success of their offer.
And how easy, and so maybe a sort of slightly, again, off-piste question, how easy is that to do when you are a big sort of global institution, global company that's not necessarily recognized as an operator of buildings? It's not necessarily it's not a B2C brand that people would know. I mean, most people walk into buildings, they have no notion of who the landlord is. How do you see that balance? Or is it something that you guys are exploring to be more visible in terms of
It's a question that comes back and forth.
Yeah, I'm sure it does.
Again, we are working for a lot of different clients. So we don't have a unique investor. We have hundreds of investors. So we cannot put the name AXA, BNP, whatever. It's not exactly... It would maybe lead to confusion of who is the final stakeholder. Personally, but we had a lot of debate around this, but I have conviction that we rather stick to best-in-class assets. You don't need to showcase who is the investor behind. You need to be just the best in the office that you are delivering initially and day-to-day. I would not brand them because, again, according to the location, the target tenants, it's not exactly the same positioning. Some might be more traditional, institutional. Some might be more looking for a more vibrant, innovative space. So again, I don't strongly believe in standardization. I don't believe at all in standardization of assets. I think each asset, each location has its own story to build. There are, again, large framework that we want to go into, but it's very specific to country, city, address in a city.
Address. And the reason I ask is that we have seen other organizations try successfully or unsuccessfully to go down that route of trying to have a more sort of consumer-facing or B2C brand. What would you say in terms of looking at different sort of your peers or competition in the market? What would you say is still something that you are still surprised by in the market? Is still people overlooking elements in terms of value creation or in terms of sort of office value creation that's still sometimes overlooked as a value lever that isn't taken at its right sort of level of importance?
I think the data piece and the digitalization of offices, especially if we talk now of offices, it's probably still overlooked, but it's still mature in terms of market. But I believe the integration between the stakeholders has still some progress to do. And I've been deep diving on this topic, and it's true that each time you open a door, you find a new angle to see it, a more technical way, and it's quite difficult to understand it. And as I like to say, there is a temptation to buy the Ferrari, but to keep it in the garage. So it's sometimes you can invest really millions in data, in digitalization to measure every single point in the building, but maybe that's not what is necessary. You need to have the key measurement to measure on the ESG piece what is the consumption, water, energy, gas, etc. You need to measure the attendance to your building so that you can appreciate internally of a wide building of campus. You can appreciate which are the warm, the hot, and the cold areas, like a shopping center.
Like a shopping center,
so that you can maybe anticipate that this area is not used, so maybe you can convert it to another amenity for the building. So I believe we are still at the beginning of this journey for data, and we talk a lot about AI. The real estate industry, to my opinion, is still a little far from this, but as we see it everywhere, it will come fast.
It'll come, yeah.
So we see, for example, on the energy topic, a lot of AI proposition to automatically drive the assets. So first we need to measure and then have some experience, and then maybe we can automatize this with those AI solutions.
As well, yeah. I think the digitalization of the assets, or at least those digital twins of being able to sort of, have that sort of parity or sort of, balance between the two is really important. One thing that I just wanted to quickly touch upon is something that, scares everyone, which is that notion of obsolescence risk, that notion of having assets within the portfolio, which, you've done your scorecard, you've done your metrics, you're looking at all possibilities. And that's, I think, something, I'm not going to say it's the iceberg and the Titanic, but that a lot of markets are kind of looking at and what that level is. Do you think it's more of a headline than a real risk, or how would you see that obsolescence risk?
I think currently there are a lot of detractors to office investment. So they use the word obsolescence as a big warning. And I think there are different kinds of obsolescence. As we mentioned before, there is the obsolescence in the design. There is the obsolescence in the ESG profile because of regulation expectations. And there is the obsolescence of usage. And I think the design piece, it's quite easy to tackle. It's some investment, but design and amenities, in general, you can manage that in a building. Maybe the external area demand is the most difficult, which needs more capex to inject. To create terraces and rooftops and things like that. But otherwise, it's not that difficult. We just need to anticipate that in the business plan. It's all about financials and assumptions in the business plan. But that's not difficult. And that's the job of asset management for ages to do that. The ESG piece is a little more difficult because again, it's more on the landlord pressure, demand, and not as much on the tenant side. So there is a way to find the profitability also of this, because our job again is to manage this performance of offices. So I would say this obsolescence one is a little more challenging. And in locations where rents are increasing progressively, or maybe you can extend the size of the building, then you can offset for those investments pretty easily, and you really find the story for those changes. When you are in a more defensive market and that you just need to manage resilience, it's definitely more challenging. And the last piece, change of usage. Again, that's a more complicated story of obsolescence of areas and of business model of offices in very remote areas.
And one of which you don't have the full control, obviously, when you're talking about the location.
That's we always talk about location in real estate, so that's also coming to this basic.
So maybe then, what would be really maybe interesting as a question, like around that obsolescence risk? Do you have sort of a couple of examples that spring to mind within your portfolio where you've gone from, another buzzword here, from distress to success, or the kind of phoenix, or that notion where you had something that was really, really difficult, that everyone was going, no, this is dead in the water, it's never going to work, to something that has been very, very successful, maybe based on those 4 criteria that you are able to measure and deploy to see whether there still is life in the building. Do you have something you could share with us?
I've got thousands of examples. That's really our day-to-day work to do that. Just to pick some examples, in the Paris region, we recently let the new headquarters of Microsoft in Issy-les-Moulineaux. This used to be an office building occupied by its previous tenant for 20 years, something like that. So it was definitely obsolete. But we also have conviction on the office area. But the competition is tough. So really fully repurposing the asset to best-in-class, great amenities, new ESG standards that really made the difference when Microsoft came to the office. It's because it was best in class in its market that it was able to drive this giant tenant.
That's really interesting. So basically, but when the tenant did give you back the keys, it was a kind of seminal moment. Okay, we're going to have to do something very special for this to be a success.
Absolutely, but that's the job of being close to the assets that makes that allow you to know that it will come. So you don't. 99% of the time, we don't know 6 months before that the tenant might consider to leave the building. So you have time to anticipate. And that's one of the challenges of our job, is that when you need, for example, a building permit, it's long to get first to build the project, and to get the building permit. It's actually becoming even longer in a lot of cities. We can come easily to 18 months of discussion back and forth with the cities to get the authorization. They are increasing control on the project. So again, that's our job also, to create the good relation with the city, to be able to tell the story of what we are creating. But that takes time. So that's indeed a great point of anticipation that we need to have on the trajectory of the assets to.
And at portfolio level, maybe a question: do you? And treating, as you said, being in touch through the building management, through the asset management teams, being really in touch with the tenants, how easy is it to potentially have those, when you know that someone's going to leave the building because it's not right for them? Are you able to propose buildings within your portfolio of going, please don't leave us because we've got all these other choices, obviously?
That's sensitive, because again, we have different clients. So you really need to make sure that you are not favoring one client to the other. So, but if a tenant has already decided that he wants to leave for objective reasons and that there is no way to keep it in the building.
Within the building,
obviously, we can propose him if we have opportunities in the portfolio. Actually, we did that in Frankfurt with a tenant that has just entered one of the also best-in-class assets that has been fully repurposed in the CBD of Frankfurt. And that's also thanks to the good relations that have been built over the long time management of the previous years, that they know, okay, this is a landlord or a representative of a landlord, because that's what we are, that I believe in. I know the assets that they are conceiving are high quality and that they will last for a long time. So I want to trust this relationship further.
And it works. And as you said, it's on that day-to-day relationship that you will be able to have that extremely qualitative data that you can then mix. In terms of sort of a couple of final questions around sort of offices, and as you said, it's been challenging. There've been a lot of headwinds. What is one key myth that you think that you keep on hearing that you'd just like to demystify and say, no, that's not true about offices today?
I think offices is not dead. Maybe that's just when you look at the figures. I checked; it's 75% of the European Union population, which is in the service sector. So it's a trend. So we need offices, and as we mentioned at the beginning, people will not all work from home. First, because houses are smaller and smaller, and because of demand. And the fact that it's the community that creates also the activity of companies. So I really think they are not dead. There will be further challenge, definitely. AI will change the profile of demand. It's still very tough to anticipate those trends, but it's definitely not dead. But what is sure, you mentioned this landlord operator shift. I call it more operating asset management, but you need to have asset manager on the ground, day to day, working actively on the assets. And I'm a really strong believer on this model of internal asset manager who are really expert on their topics.
On their topics and know their assets really well and know their clients really well. So an overarchingly positive message around offices and for investors, of course.
Come back to office.
Come back to the office.
As a consumer or as an investor, definitely.
For both of them. Do you see, obviously it is a positive story. It is, as you said, an asset class in transformation, which is becoming better at providing what it needs to provide today. Do you see other people potentially coming into the market, seeing this as an opportunity and going, well, we used to be in other asset classes. Hey, offices seems good.
Yes, we are seeing that. It's the recovery. There are some live testing of the market currently, so it will be interesting to see in a couple of months how those have been performing. But definitely this office bashing that was very loud 3 years ago now is definitely more mitigated in terms of polarization, understanding the polarization of market. And we are now starting to see that materializing in the transaction. Also because of the financial vision of it, that there is a general expectation that even though they may soften, the yield cuts might pause for a moment. So there is no reason just wait additional months if you have decided to sell assets in the portfolio.
You should go. Yeah. You mentioned something, and this is something that's been. I always try and find the source of things. Why did you think that office bashing was allowed to have or had so much weight or so much airtime when in reality it might have been more noise than actual reality? Why do you think, and who potentially, in your view, who do you think benefited from the office bashing, or why did it take such a big
I don't think it was only noise. I think it was real. I think we are very European focused and definitely there has been hits on the market, but not as strong as what we have seen in the US.
Yeah, exactly.
And I think it was not at all noise in the US. It's a fundamental change and shift of the office market and demand that has been a very strong and real shock for the investors. So again, when you've been through such a shock, it's difficult to to regain confidence and to make the difference between the temporary risk, the temporary trend, and the long-term trend.
Outlook and trend, yeah. And in a sort of to summarize everything then in your own words, the podcast is very much about how do you unlock real estate value? How do you unlock value? What is value for you within the office market and the real estate market? How would you personally define it?
People.
The people.
I think that's where we talk about your name is bricks and mortar. I think it's brick and mortar and people.
Yeah,
definitely.
And in terms of the people working within the industry, so they understand what people want and they're active within that. 100%.
And again, because there is no fixed framework for things, it's changing so often that you need to track this and to be very, very close to that, and that's human people actively seeing and anticipating those trends.
So keeping your finger on the pulse, then.
Yeah,
100%. Emilie, thanks ever so much for a very engaging conversation, and thanks for doing this in English.
Yeah, I hope you understand everything.
Absolutely everything. Thank you very much.
Thank you.
Thanks for listening to Bricks and More. If you've enjoyed today's episode, please share it with a colleague or friend who would appreciate it. If you're not already, connect with me on LinkedIn, whether to say hello or discuss a destination, real estate, or hospitality project of your own. Finally, please rate the podcast on Apple, Spotify, or wherever you get your podcasts. Again, share the episode, connect with me on LinkedIn, and rate the podcast. I'm Adrian Strittmatter, and I'll be back soon with the next episode.